Hi, welcome to the Market Alert for Thursday, the 28th of September 2023. So bonds and bullion purged as crude and King dollar surge into quarter end. So again, there's no stopping the dollar now. It's got some momentum behind it. Yields and dollar surge to fresh year-to-date highs into month-end quarter as well. Economic news for today. All day German CPI could be released, is what they're saying there. 8 a.m. we've got the Spanish CPI, and then over to the US we've got the quarter GDP, which is indicated there or forecasted to actually rise by 0.1. Unemployment claims, final GDP is also to be released, but the final comes out at exactly the same as the forecasted. The previous. We'll see. Pending home sales, and then Powell is speaking at 9 p.m. tonight, so that's not going to affect the markets because they'll just be closing at this time. So let's move on. Have a look at the Dow, see what it did during yesterday. I think you'll see a familiar pattern that is appearing over the last few days. So in the Dow, yesterday the market lower once more, still trying to hold around this level though. Let me just drag this out so we can actually see the number. That's not the one I wanted. We'll drag it this way then. So yeah, 33,605 is where the market's trying to hold at the moment, which is also 38% resistance to the upside as well, drawn from here down to here and projected back. So the fact that we're below 33,605 could pose a bit of a resistance. The market will need to get through this in order to move higher. 30-minute chart, like I say, a familiar picture that we're seeing. But also beginning to wonder whether the PPT are in here, the plunge protection team, bringing the market back. Currently, we are above the DP and heading towards the close. So a bit of relief from yesterday's sell-off. Market trying to hold there. Like I say, a bit of news out today to move the markets. We'll see what happens. In the German DAX, also lower. Let's go to the weekly chart and have a look, because we can't see much to the left on that chart without squeezing it up and then making it difficult to read. So the weekly chart is the next best option. We've got 62% retracement there. Market currently coming off the lows as well yesterday. So the daily chart, you can see there we're oversold, and we're coming up a bit there on the close of yesterday as well, and then trying to move higher overnight. So in the 30-minute charts, again, very choppy. Yesterday in the 30-minute chart, and it's only when the US come on stream that the market actually moves at the moment in the DAX. It's very, very painful to actually see at the moment, but particularly to trade in the morning. But the afternoon and into the evening, it just follows the Dow. So anyway, overnight the market's sideways to higher above the DP and above the close, so showing a bit more strength, and it's probably why, when the Dow weakness comes in, even on the overnight, the DAX is managing to hold, because Europe is as sound as a pound, isn't it? But there you go. That's what they're doing at the moment. They're holding the markets to the upside. In the S&P 500, trading down to the 200 MA there, we've got a bit of buying coming in. It's oversold. So I've marked up some upside targets just in case we get a bit of a dead cat bounce. Those are seen there. Same as the Dow yesterday, market sideways all morning, then sells off and then came back and above the close, well, just heading for the close, but above the DP at the moment. In the FT100, holding really well, not having to refer to the weekly chart at all because the low is still intact. So the market finding support at the 20-bar moving average. And also in the 30-minute chart, you'll see there that we followed the US down in the afternoon, but came back and are above the close and the DP, and just trying to get above the psychological level there of 7,600. In the US dollar, it continues to move to the upside, sharp move to the upside there yesterday, and I suspect when Powell speaks tonight, that will be the same once more. In the weekly chart, you can see how big this move is now. I'll just rescale the chart there. It's green all the way. Every week it's closing higher than the week before, so a lot of strength there. I don't know what's going on, but something's going on to give the dollar this sort of momentum and strength. So the pressure, of course, comes to the metals and everything else against it. So let's have a look at those. So in the metals, as I've mentioned before, we're going to take out the lows in this market, and we're going to go down to around $20, I reckon, if the US dollar continues to move to the upside. Particularly if I'm just going to go back to the US dollar, particularly if we head back to these sorts of highs up here, they're just going to send the dollar. If they send the dollar up there, it's a big move, obviously because it's a weekly chart. But that said, that's going to just move the gold metals lower, particularly silver, down to around $20. There you can see again, monkey hammered as soon as JP Morgan starts trading in the afternoon, along with the other bullion banks and the LBMA's spot price. Gold, on the other hand, was absolutely monkey hammered yesterday. I've not seen a move like that in gold for some time. You only have to look back at the charts. So under pressure, huge amount of pressure yesterday. I don't know why. They just came in and sold the paper market. As I said to you before, if they get it below $1,900, they'll move it down. You could go down as low as $1,600 in the gold market as well. As you can see there, down here we were at 16. There's 1,600 level there. So it wouldn't be any surprise to me whatsoever. It'll be a bargain when they do these sorts of things. Last time they did it was during COVID, and they sent the silver price down to $13, which was an absolute bargain. So when others were buying toilet rolls, I was buying silver because it was an absolute bargain at that level. And I think if you want to drop it down to that level, then feel free. But yeah, so that's the gold market. So let's have a quick look at the gold-silver ratio before we finish. So gold-silver ratio, amazing that both yesterday gold and silver were really hammered percentage-wise the same, as there's not much movement on the downside for the gold-silver ratio there, and then up on the overnight, which means silver's being hammered more than gold at the moment. Okay, let's see what happens today, and certainly at 9 p.m. this evening when Powell speaks, see what he's got to say for himself. They all still seem fairly hawkish about continuing to raise rates. Let's see if he mentions it later this evening at 9 p.m. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.